Welcome, trade spooners, to our pick for January 21st, 2014. We're taking a look at short Barnes & Noble. BKS is the ticker symbol. Scrolling down and taking a look at the proprietary risk-reward rating here at Tradespoon, we have it mid-range at 5, and we have the value momentum on the lower end of the range at 2. So again, take a look at the explanations for those of you that are new to the service, and for those of you that have been using it for a while and utilizing the videos, we thank you. And again, you can just hover over the question marks, and that's where you can get explanations of these indicators. As always, download the analysis that we do build out, both fundamental and technical, here at Tradespoon by our proprietary analysts, utilizing our proprietary technology. Now let's take a look at the pick. First of all, the price action of BKS. Close price at the night before the pick on the 20th was $15.18. It's off the highs of $23.71 and off the lows of $12.59, but has been on the downside. We have seen an uptick in volatility change. In other words, off of the lows of the implied volatility over the last 52 weeks, vol has actually popped about 8%. And as a matter of fact, if you take a look at this vol chart, you can see that the current implied volatility, that green line, has popped off of these lows and the lows of the last 52 weeks. And you can see it in this particular chart right here and table. Now going back to the pick, we're going to see our return on capital is 100% for the options transaction, and our probability of success is 68%. And again, you can hover over the question mark. These are new inputs that we're putting out there just to give you a lot more visibility as well as some confidence about what these particular picks are. The estimated move, EM, is right now being calculated into March expiration at about $2.75. And the options that we're going to be using are expiring in March. Let's scroll on and take a look at the picks. We're looking to sell stock, BKS, entry price of $15.18 or better. Once we are filled, we're going to put a buy limit $3.20 lower than our entry price. So in this case, we're roughly looking at getting in, putting a buy limit to close this at around $12 and some change. So you can put in a buy limit, good until cancel, at $12 and change to close the trade. You could simultaneously put a buy stop above your entry price, $3.20 specifically above the entry price. So that would get you out right around $15 or $18.40, which would, that buy stop would be in good till cancel. And you would have that in as an order, one cancels other, and your brokerage firm should offer that contingent order. For options traders, we're looking to buy the March $15 puts. The March $15 puts. We're looking to pay 90 cents or better, and our profit target is our entry price plus 90 cents or $1.80. So we would put a sell limit good till cancel at $1.80 to take profits if it reached that point. Now do remember, if it does not reach that point and you're at expiration, you should take action. Your max loss is going to be the total amount paid for each contract, 90 cents or $90 per contract. That's why it's smart to use prudent size management. We are suggesting that you use somewhere between 3 and 5% when you're using a stock pick of your either cash available or percentage buying power. And we're also suggesting that you go no higher than 10% on any options pick. Now the option spread trade, for those of you that are spread traders, you're looking to sell a call spread. This is called a call credit spread. And we're looking to sell the $15 calls and receive $1.20. Now, we don't want to have that unlimited risk to the upside. In other words, if the stock does decide to trend to the upside, which is against our analysis right now, but could happen, so we're going to buy an insurance policy and buy the $16 calls for 70 cents. That means that we're going to receive a net credit, or our total profit potential for this particular strategy is going to be 50 cents. Our risk is also 50 cents. That's the difference between the strike prices minus the premium you receive. That happens to be 50 cents. And as always, you can use our proprietary Tradespoon virtual trade to go in and test out these new strategies if you've never utilized them before. Scrolling down and taking a look at the stock chart, you can take a look at and see that the stock recently has been trending to the downside, so that fits with our bias at this juncture. One other note, Down here in the key stock events, you'll see that we have earnings on 2/27, which is, for you options traders, a date you definitely want to stay on top of because it's before March expiration, and we want to keep an eye on the price action. Also, for you stock traders, this is a very important date to have on your radar screen. And you can keep an eye on the latest news and commentary for BKS. As always, you can always email us at info@tradespoon.com. Check out our new videos. See the recent picks, and always keep the performance. Well, that is it for trade.